Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technologies. For those of you who are new, welcome. If this is your first live event, do me a favor, just type in first. Always want to welcome new subscribers. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Right, before market opens, let's go over the trading plan. I propose 30% of your portfolio to be in cash. Portfolio drawdown is very important. How do you calculate portfolio drawdown? You look at number of positions. I propose to have 4 positions at this point on average, and not risk more than 2.5% of account value. How do you calculate 2.5% of account value? Well, you look at the price you enter and your stop level times number of shares or number of contracts. So right now, market has confirmed the bottom, 380 on S&P. If you're holding position for a couple weeks, couple months, I would say this should be your stop level. Right? That's the line in the sand that separates bear market and the bull market. Bulls were successfully able to defend that position and confirm the bottom. So I think at this point, this is the level. Right? If you're shorter term, aggressive trader, you hold a position for hours, maybe a couple days. You can lift, the next level was around 396, right? So then I would say 396 is your stop level if you're doing shorter term aggressive trading. But this is how you calculate 2.5% of account value per position, right? Based on that stop level. Very important calculation. I encourage you to do that every time you enter the trade and journal it and enter that calculation to your journal and kind of go through that mental exercise both on the target gain and on the stop loss to make sure that you're not overextending your buying power. Very important calculations. So the trend has been confirmed. Short term, we're trading in the uptrend. Long term, we're trading in a downtrend. Do not break legs of the spread unless you see them at key support and resistance. Again, always allow more time. If you're trading options, obviously that means push your expiration maybe into September, maybe in December. Allow more space. Right? If you think stop loss is 396, maybe a 380 would be a better, more conservative investment, and that means your trade size will decrease. Look at ABC patterns, right, or 1 through 5 patterns, Elliott waves. These are we're trading a very technical trading market. Looking at the value or looking at how much stock is oversold, overbought. For the next 12 months, it's probably not going to be the best strategy. The best strategy is to look at technical data, technical patterns, and see in technical analysis is going to be more important than fundamental analysis, right? Qualitative analysis is important. Looking at the macroeconomic conditions is also important. Wait till end of day to make trades and do not go short puts or short calls. Always be aware of earnings dates, right? CRM, HPQ announced earnings. So if you have those positions, you need to consider hedging them. Do not chase the trade. Emotional intelligence is important. Trading based on the Canary 58, welcome. All right, we have on Discord servers people. Let's say hi. Welcome. Let me know if you have any questions. Perfect. I see some people. That's great. Try not to call the bottom, right? Look at the bottoming process. Same thing, the top. Don't call it where the top, but recognize the top building process, right? Like, you know, one would be example, maybe oil. Oil and commodities looks like they're building the top, right? They're going through the top building process, which is not to say where the top is, but at least recognizing that maybe momentum behind the bulls is decelerating and we're close to the top. So both top and bottom, and be flexible in your opinion, right? Short term, you know, I'm bullish. Long term, I'm bearish, depending on the data and depending on qualitative analysis and quantitative analysis. You know, I can change my opinion about my short term view and long term. Right? So that's. Let me know if you have any questions in terms of. Let me see. All right, in terms of, and again, if you're on Discord server, Canary 58, just use the stream chat to say hello. That'd be great. Or just say that if you can actually hear me or see me, that'll be great. All right. In terms of the market, just open. Let's look at the trade spoon, the model. Support is at 409, overhead resistance is at 416.80. We're approaching 416.80. Positive trend. Model does see in the next 10 days more room to the upside, potentially retesting either 430 level or 440 level. So model is turning bullish. The momentum is behind the bulls. Kind of had a classical where's my pen? I updated my operating system and don't have a pen. Digital color meter. All right, have to download it probably. Okay. But anyway, classical double bottom. All right, so kind of a classical double bottom, right? We've reached the bottom at 385 level, reached the bottom 380 a week later, and then pull back to the neckline, and now trading a little bit higher. Futures, again, yesterday were at 420. So that's the overhead resistance. I would look at the futures data, and that's corresponds to January low, right? January low and March low, right? March, not we broke to the February low, March low. So somewhere around 420 is your overhead resistance. And support 408, right? So you have the breakout, right? 408.95. This is where I would consider buying. If the 408 level doesn't hold, I think the next level would be around 400, right? The 62% retracement, 398. So 400 and 409 are your two supports. If you're aggressive short-term day trader or aggressive short-term buyer, those are the two levels you want to consider buying, 408 and 398. If you want to take some profits I would do it around 416. I mean, we need to break above that level, and then 420. Those are your two short-term day trading. Longer term, I think, let's see. The model has adjusted the 6 months view. Excuse me. So same model, stock forecast toolbox, looking at the 6 months prediction. 6 months, the model has adjusted. So we're still trading in the downtrend, right? Because in the past 6 months, we're trading lower highs and lower lows. So a lot of kind of a long-term structural damage to the market where, I haven't seen this since 2008, where long-term market is trading in the bear market, in downtrend. So since this is the first time since 2008, I see the model showing strong negative trend. So to reverse that, it will take months, right, of higher highs and higher lows. So we need to have June, July, August to be higher highs, higher lows for the model to kind of learn on the data and adjust its opinion. 440 overhead resistance, 387 is your support. I agree with the model. I think this is exactly where your line in the sand, right? You want to go short 430, 440. You want to go long 387, 375 until you see if those low levels are breached. If the 380 level doesn't hold, again, model actually sees by November we will be around 338, the low, right? And gravitating toward 350. I think, unless inflation data if nothing is changing in the system, right? If the Russia-Ukraine war stays, at this similar levels, if the inflation data stays in similar data, then technical analysis alone, we're heading toward 350 level. 350 and worst case scenario 338 based on the current. So I agree with the model. I think that's my also view on the market. Meanwhile, we still can have rallies, right? We can still reach both extremes in June, July. We can reach 440 and we can reach 380, right? As we're heading higher, 420, the air is getting a little bit thinner, right? Because you're only going to have, best case scenario 10, 20 points to the upside. So if we reach 380, this is a good opportunity to buy, assuming that level holds. And at 440, 430, you should consider taking some profits. So that's a long-term perspective. Short-term, let's see. Treasury so yield yesterday was steepening, today is flattening, right? The 2-year moving much faster than the 10-year. TLT is slightly higher, so it's stable, right? Stable. We're not falling off the cliff. We're not rallying. We're kind of trading at this consolidation, and that's what equity market likes, right? Similar with dollar. Strong pullback, bullish for the market. It's rebounding, going through consolidation. That's positive for the market. Let's see if anything else. QQQ leading the market, up 1%. Let's see, we have Google's. Let's look at, so mega cap technology. Google is up 2%. Microsoft is up 1.5%. Apple is up 1%. And that was one of the theories, is that technology is extremely oversold, right? Down 30%. Technology is leading this rally, right? Looks like that's the case right now. So technology is up 1%. Mega cap technology is leading. All right, how's ARK? ARK is underperforming, but okay. Silver is up. Silver is volatile. Then entire, kind of entire. energy complex, right? This is the top building, right? Extreme volume, reversal, follow through. But again, is this the top? Don't know, but does it look like a top building process? Yes. And similar is FCX. All right, XOP is also kind of losing momentum, right? After yesterday's volume. Let's see what else is interesting. And Bitcoin, I think that's delayed. All right. Let's take a look. So energy rebounding after yesterday's pullback, after yesterday's volatile session. Let's see, safety asset classes are underperforming, consumer staples, utilities. I would take profits in the safety assets classes. And then in value in general, I think this rotation into safety asset classes, right? Value stocks, where we said value has been outperforming the beta, high beta technology, and that's what kept the market afloat. I think that trade is coming, it's getting close to an end, right? Maybe June, you know, maybe half of July, but I think it's going to reverse, and I think value is going to underperform technology. They're both going to, you know, underperform, but I think there'll be more pullback in value, mainly because of the commodities and safety, commodities and the safety asset classes, right? Like consumer staples, I think will underperform, REITs will underperform, and utilities will underperform, right? And we'll see, you know, QQQ kind of, I mean, it's still gonna underperform, but it will outperform the value. It will outperform the value, you know. CRM after earnings up 13%. Again, I think it's mainly because it, you know, sold, you know, lost half of its value and still has a high PE. So it does have positive earnings. Stock is up 13%. I would probably not chase this rally. Probably going to be short-lived. And HPQ is up almost 2%, kind of trading flat. Reverse down. Consumer discretionary is leading the market today. QQQ, so discretionary up 1%, QQQ is up 1%, value underperforming. Let's see if anything else stands out. Probably not. Ukraine. All right, 10-year yield pulled back. TLT updates. All right, let me know if you have any questions. Bob present. Well, no, end of day, if you're active trader, I mean, if you're day trading, obviously you can't just trade at the end of the day, right? You have to put on position, you know. I usually wait for 3 candlesticks, 5-minute candlesticks. So day trading is different, but if you're holding positions overnight, I would stick to end of day. Fred, can we go through the model outlook for 6 months now to see what, all right. Let me know if you have questions on 6 model. So 6 months model, it got adjusted right first of each month. It took into consideration in May, we underperformed in May. It says June, July, we're probably gonna hold the 380 level, right? If I would probably June, July, we're gonna hold the 380 level, but probably, you know, I don't know, August or maybe September or October, we're heading lower, right? Below 380, and worst case scenario 338, average price is 350. Right. So between now and November, you have midterm elections, we have earnings, you know, 2 earnings cycles, we have a very strong dollar, you know, still Russia-Ukraine war, so there's a lot of headwinds. So assuming that there's no new news, right? Assuming there is no new news, if you leave the system the way it is, just technical trading, we probably should get to 350 level by November. It could be August, it could be September. You've seen how in May we underperformed. Model, I think, said 405, we were at 385. So depending on news, same thing can happen. On the downside and in the upside, right? It says 440, we can trade at 450, right? I doubt, but obviously the idea that pendulum swings on both sides, right, to extreme. But that doesn't mean that that the model is wrong on the trend. It does see that the trend is negative. It sees, okay, June looks like it can be a good month, but then June, July could be a good month, but then the sell-off will restart sometime, based, July, August. Yes, if the model does not weigh in black swan events. This is assuming no black swan events. Yes. Fred, thank you. Our trader, what about Call Flyer? Hello, Call Flyer. All right. Let me see, other friend. A message, I can do message. All right. I'm on Discord server. We finally fixed the permissions, so now we're seeing people joining. So I'm now having fun on Discord server. All right. You guys wave back on Discord server. All right. What about snow? High beta technology stocks like snow. I put them all in the same category. ARK, right? To me, this reflection of the ARK. Maybe someone can outperform. This is Snowflake. Their analytics, artificial intelligence, all those fancy words from last year. But the problem is the earnings. They're still not making any money, right? Last time I checked, right? They're still losing money. So it looks like they had earnings. Looks like it's going higher, but I don't think this downtrend is going to be broken, right? It's a very strong downtrend. So my thought process, if you're aggressive short-term trader, right? Again, you only have 4 positions. If you want one of these positions to be snow, I personally think it should be QQQ, right? Not snow. But if you for some reason you believe snow, you just keep in mind snow is up 6%, QQQ is up 1%. So it's a ratio of 6, right? It's a beta of 6. So I doubt that QQQ will be snow will be up 6% and QQQ will be down 1%. I don't think that will happen over short period of time. So, but the chart pattern looks a lot worse than QQQ. So I would rather be in QQQ or maybe Google or Microsoft, but it will follow QQQ, right? Same thing. I think June, July is going to be good months for QQQ. Actually, let's look at QQQ. I didn't even look, but let's see. For 6 months, QQQ. Yeah, actually, vector turned positive for QQQ. Model sees that it's extremely oversold. So, but it sees, oh, no, sorry, 10-day. Nope, scratch that. 6 months. Okay, negative, sorry, that makes more sense. Okay, so 280 is the support, 331. It sees 331. So similar to, I think QQQ can go to 330, maybe 350, right? Back to this downtrend. I still think a pattern of lower highs, right? We went from 400 to 370. It's reasonable to assume we're gonna top out somewhere between 330 and 350. Right, model says 330. Model says 330, okay. Again, just because model says 330, that doesn't mean this is absolute level. Maybe 330, maybe 340, but that would be the top. So that means snow will probably follow, right? It will follow with that beta coefficient of QQQ. If you like high flying, high beta stocks, that would be the trade. But again, you have to be short-term aggressive trader. Short-term aggressive trader, I would be a buyer into pullbacks, right? And maybe try to drive QQQ to 330, maybe to 340. Long-term investors, if your time horizon is 6 months, a year, and you don't like these short-term volatility, I would be a seller into the rally, right? I would sell snow, I would sell QQQ into these rallies because I don't think we've reached the bottom. According to the model, we're going lower, and I agree with the model. Eddie, I have not placed any trades this morning, not yet. We'll review the trades. Let's see. Bob shows seasonal chart. You can see I stopped. I stopped showing seasonal chart because the problem was the seasonal charts and even in general the models, right? Because we haven't traded 6 months in down market since 2008, and from 2008 it was 2001. So in the past 22 years, right, in a quarter of a century, in the past 25 years, there was only 2 occurrences where the market was down in 6 months. This is just not enough data for the model to really learn and make really good predictions. I like Stock Forecast Toolbox because this is more of a momentum model. It shows you the trend, it shows you momentum, and and I think this works better than the seasonality. Seasonality, well, what's the seasonality? We haven't had this type of conditions in general. But if you really do want to show seasonality, actually 404 higher also confirms that market is oversold. Usually we have summer is volatile, right? End of May, you go away. June can be volatile, right? You can have higher in June, July, then lower. Then the market's heading higher. Correlation is -40, right? We have correlations of -40 this year. That means that almost inverse correlation, right? Usually market rallies April, May. We had a strong sell-off April, May. So it shows you that we're -40 correlation. That negative correlation is probably going to stay, right? Usually, September, October, November is good for the market. It'll probably be bad, right? The probably market is heading lower, right? It's going to be inverse correlation. Kevin, predictive SPY chart. Yeah, this is what the model sees predictive, right? So February 22, May predicted close 314, close 308, but June, July, lower, right? It looks, the trend is to the downside. Fred, thank you. All right, so let's review some of the trades, right? We're here to trade. We're not here to talk. Actually, we're here to do both. So first, I'm long FCX. I did take some profits, right? So FCX looks like it's losing momentum, right? I'm a little bit concerned about commodities. Commodities led the market, now technology is leading the market, so it looks like there's some change. I bought FCX 38. I trimmed it at 415. I mean, I don't, again, I don't want to call the top. Very hard to call the top, but I'm going to close it. Probably not add to FCX and just close it on the rally. HPQ is the earnings strategy, right? This is one of the earnings power trader services on Yellow Tunnel. So I sold it for taking advantage of spiking the volatility because market is volatile, but also the earnings. CRM, I didn't want to do it because again, the multiple is 100, and any bad news and the stock would have sold off. Any good news, the stock rallied. So I didn't want to take the risk. But HPQ looks like taking advantage of the volatility. Let's see, HPQ is, where's it trading now? So it looks like it's higher. So I'm going to close the calls, right? Market can continue rally, especially in HPQ. So I did sell 45 call, and I can put in order to close. You can close both calls and puts if you want to free up your buying power, right? A lot of people ask me that question, why am I closing these trades? The disadvantage of these trades, they do take up a lot of buying power, right? They do take a lot of buying power because I'm selling 45-50 call spread. One contract is, $500. If I want to release that buying power, the only way to do it is to close. But again, collected 15 and 12 cents. It might not seem like a lot. A lot of people say, Vlad, what's 15 cents? It doesn't really make a difference. But if you add 15 and 12 and it's 27, and out of 40, a $40 stock, 27 cents, this is more than 0.5%. So 0.5%, you capturing 0.5% for overnight, that accumulates, right? So compounding investing is important, right? Looking for these 0.5%, 1% gain. Trade small, trade often. So this is kind of my one of my favorite strategies in the current market environment is sell the premium on both sides, right? If you believe that QQQ is not going to resume its bull market, right? It's going to top out somewhere between 330, 350. Okay, so as you see it losing momentum, you sell call spread. Right now I have I sold a put spread. When I see the momentum is start deteriorating, I'm going to sell a call spread, right? Or like Carol and Teresa said, buy out of the money put spread. But that would be the strategy. Why do I like in the money spread like XOP? When I buy a call spread, I usually buy in the money to remove the time premium, right? So if I buy out of the money call spread, I think, I want to improve return on capital, right? I want to risk less money, right? Because it's out of the money, but it has to move. Only if I think it's going to have a very strong move would I buy out of the money call spread, right? Or out of the money call, because I believe XOP is going to make a large move to the upside. At this instance, I think we're going through the top building process. So I think there won't be a very strong move to the upside. So buying out of the money call or buying out of the money call spreads, there's a time decay and theta will work against you. So I'm buying in the money call spread with the idea that oil will be volatile, right? It's going through the top building process. Maybe still a good strategy to buy at the bottom, buy on the pullback. My thought process that I know where my stop loss, it's around 145, 150, right? This is kind of, again, double bottom. You have overhead resistance. It broke through this. If it pulls back to 147, I have an opportunity to close the short call and leave the long call, right? So we're talking about XOP spread, right? 145, 150 call spread expires in September. Assuming that oil is going through the top building process, right? We've seen crude oil kind of multi-months ever since the war started, right? Russia, Ukraine, vertical move up in the oil, and then it's not going anywhere. Only now it's kind of trying to break through this overhead resistance, but you can see the momentum is deteriorating, right? So assuming there's, and yesterday, we had these sanctions that 2/3 of Russian oil will be taken offline. And move is a lot smaller than when the war started and everybody was buying the oil, right? So you can see that based on the news and based on the price action, the momentum is deteriorating, right? So for that reason, I bought 145, 150 call spread, because my thought process is that at least short-term 145 level should hold, but if it does pull back to 145, which would be a strong pullback, right? It would be 10% pullback, then maybe close the short call and have the long call, trade the long call. So Pat, let me know if that makes sense. What is my favorite indicator to see momentum decreasing? My favorite indicator is a 6 months chart, right? I've always seen that every time we reach high or low, momentum is decelerating. Does it mean that this is the low or this is the high? Not always, but is momentum deteriorating? Yes. And my thought process, when QQQ reaches 331, the momentum will start deteriorating. That's my favorite indicator. Right. I mean, can it go 5% above that? Another 15 points to 345? Sure. But will it be on a strong momentum? Probably not, right? Probably kind of a choppy market, just slowly going higher, right? But this is a rate of change. Favorite indicator is, I mean, there's a momentum indicator, but I usually just look at the physics, how much the price is moving over time, right? It's, I don't have my pen. I gotta put my pen back. Let me write this down so I forget. Install pen. So, I'll look at the weekly chart and then we'll see how much, right now you can see momentum is deteriorating, right? We went from 280 to 308 and not really a lot of movement in the, in QQQ. Well, I mean, today is Wednesday, we still have 2 more days. We'll see where we're gonna close, but it's the distance over time, right? How much we're moving, it's a velocity, how much distance over time. So if in 1 week we move from 280 to 308, that's what, 30 points, right? We move 10% in 1 week. Next week, let's say we're gonna move, I don't know, 4%, and then in the third week we're gonna move 1%. Then I know momentum is deteriorating, right? The velocity of the movement is deteriorating. It still have a positive acceleration, but at some point acceleration will change to negative, right? Kind of like here, positive acceleration, momentum is deteriorating, and then you have reversal, right? Acceleration from positive becoming negative, right? Slope is changing from positive to negative. Once you see slope is negative, then you know that momentum is deteriorating. Do I like XOP today as much as yesterday? No, I like it less. Obviously, this is not a good price pattern. This reversal, strong move to the downside is, I'm a little concerned about just commodities in general, right? You see the similar FCX losing momentum, XME losing momentum. Materials are down, metals and miners are down. I mean, energy is up today, but the rest of the copper is down, and technology is up, right? And technology is up. So I think that would be I mean, 1 day is not a trend changing, but it looks like rotation from value into technology, right? So this rally in the bear market probably will be led by technology, right? And that means that on the next leg down, what's going to support the market, right? Before, when technology was leading the market to the downside, commodities supported value, consumer staples, commodities supported the market. And if consumer staples and commodities do not support the market, then maybe that's when we're going to see that capitulation. That's one of the thought process. Never seen the capitulation. Next time VIX will approach 38, and if commodities and consumer staples underperform in utilities, then we might see the capitulation. All right, let's go on. So that's HPQ trade. Call flyer, Canary 58. Do you guys have any questions? Let me know. Please type on the side of the chat. All right. What else? All right, let's continue on. So that was HPQ trade. IWM. Looks like also losing momentum, pulling back to the breakout line, right? That's the neckline around 182. Similar strategy to the rest. Bought at 440, trimmed at 520, have an order to close on 750. So trimmed the position and now waiting for next leg up. QQQ. One of the changes I did, I think QQQ will continue to head higher. So, I'm increasing my credit put spread. It was 280, 275. Now it's 280, 260. So I made it a little bit wider. Instead of adding to a position, I'm widening the strike price. Also, very important concept, right? Because you have to always remember that when you sell 280 put, you own $28,000 on one contract, you own $28,000 of QQQ. So if QQQ drops 1%, when you have one contract, right, you're down $280, right? If it's a short put. But if you have two contracts, you're down $560, right? So 1% of 28,000, am I doing this right? $28,000. 1% of $28,000, it's $280, right? So instead of selling two contracts, right, and owning $56,000, if I want to get a little bit more bullish, then I'd rather just increase the strike prices, right? I mean, it's September contract, delta is not 1-to-1. You still have theta, you have debit put spread, so it doesn't move 1%, but you get the point, right? You get, especially as you approach closer to September and delta does become closer to 1. One of the mistakes is that you look at your debit spread and you say, well, I'm bullish, market continues to go, let me just do two contracts. I would propose, instead of doing two contracts, first increase your strike prices. You want to get bullish, instead of 280, 275, do 280, 260 put spread, right? Because I'm kind of looking for the time decay and I want the price to decay. So that's one of the adjustments I did to the QQQ trade yesterday. SH, if you don't feel comfortable trading options, one way to hedge is inverse ETF, right? We had a strong pullback in SH, inversely correlated to spiders. As market loses momentum, again, one way to trade is to add to SH, right, as a hedge. We talked about silver. Commodities are volatile. It is up 1% today, but looks like it's losing momentum. So for now, I'm just waiting. Still in long spiders, right? If you're not comfortable trading options in Robo Investor, or you can always buy spiders, right? So I'm trading around spiders position. Same thing using position dollar cost average, right? So bought at 380 by 398. Trimmed at 405, and now trying to trim at 430. We talked about XLK. So again, bought at $4, trimmed at 480. And have the rest position trimmed at 750. So still bullish technology, and we already talked about XOP. So bought it at 3, trying to close at 345 and 4. So those are the position and trades for today. Let me know if you guys have any questions. Let's see, in terms of earnings, I think there's some earnings. Let's look at the earnings. And tap aftermarket close, and you have HPE. So HPE, $20 billion, dividend 3%, 30 million shares, and tap. So, similar company, similar market cap. NTAP looks like less liquidity, so maybe HPE is better. Looks like its average volume is a little bit higher. So those are the two I would consider trading. Any questions? Coal Flyer, Canary 58, any questions? Can you guys hear me? Type in yes inside of chat if you guys can hear me, and then go to webinar. Eddie, yeah, so in the lead circle today, I would look at today. So for now, I just closed HPQ 45 call. So I did not put on any new positions today. I did close the HPQ. And if you want to see last 7 days, then you can just look at the last 7 days, all of the trades. And today is June 1st. So, right? Today is June 1st, not June 2nd. So I would just pull on today. If you want to see it today, just click on today. Right, from June 1st to June 1st. William, let me know if you guys have any questions. Any questions on Discord? Do me a favor, we're trying to build our presence on Discord and YouTube. So on YouTube, obviously, if you click on TradeSpoon, search for TradeSpoon, click on the TradeSpoon, and we have morning bell, 8:15 on Monday, and then closing bell, 1:55 p.m. Central. Tuesday and Thursday, we have a brief, and we have a roundtable on Monday and strategy roundtable on Friday. So we're posting a lot of content on YouTube. If you like our content, please subscribe. If any of these videos you find helpful, I would greatly appreciate if you can share it with your friends on social media or your fellow traders if you're part of any of the traders community on the forum or anything. It helps people navigate through the current market conditions. It's going to be a rough year for any experienced or unexperienced trader, and this content I believe can help traders, experienced or unexperienced, navigate current market conditions. So that's YouTube, and you've heard me talk about Discord every Monday. If you're on Discord user, same thing. find yellow tunnel, and we have live broadcasts every Monday and Wednesday in the morning, which you can participate, or if you invite your Discord traders, then they can also participate. So YouTube, Discord, trying to grow our social media presence by sharing the videos, broadcasting live, and you guys are my most loyal and dedicated subscribers, so I would greatly appreciate that. Any other questions? HPE, again, I'm gonna wait till end of the day. Looks like HPE is up. It's pretty strong rebound, I like that. QQQ actually turning negative. Right, so probably makes sense to wait till the end. But the setup would be the similar. Let me look. Let's put an order away from the market like we did yesterday. What am I doing? Give me 1 second. Okay, so let's look at HPE. Let me add it to the. All right, so HP can move. It could be volatile 10%. So let's see, 10% would be $1.50. So let's see, $14. So $14.20. So sell to open, one contract. Let's see. Probably not gonna move a lot. So okay, so I'm gonna sell to open 2 contracts for 20 cents. That's a 10%. 10% of a $15 stock, that would be $1.50, so that would be $14.30, so 14. So you might get a sign. I'm going to change it to 1 contract, do 1 contract. 20 cents, that's a lot, it's more than 1%, let me see. 13 would be better, it would be 10 cents, but probably not going to get filled for 10 cents. Let's see. It's probably safer. You can sell it for 5 cents, it'll be still 0.5%, but okay. So we'll do 14. 20 cents. So that would be a trade. Again, if you get a sign at $14, right, your break even is $13.80. Right, that would be the low. I mean, it can undershoot by another 5%. So it's again, 100 contracts would be $1,300. 5% would be $50. That's less than 2.5% of my account value. So in theory, I can go sell short, just short put, right? Just sell short put. Because you're not gonna, and then if you want to improve, so this is one example where you could go just sell short put, right? If you cannot sell short put because of the requirements, it's not, it's a pretty wide bid and ask. I mean, it's relatively liquid, but bid and ask is pretty wide, 5 cents. So the only way to hedge it is to buy maybe 11 put for 5 cents. Unfortunately, on the call side, it's kind of the same thing, right? I would have to sell 17 call for 20 cents, assuming it's going to rally to almost all-time high. So that's why I collected 40 cents. I mean, it's a lot, right? It's almost 2% of the value. The stock could be volatile, but it's a low price stock, right? It's only $14. So even if the trade goes against me by, let's say 5%, right? 5% of 1,000, 10% of 1,000 is $100. 5% would be $50. So $50, it's less than 2.5%. I'm willing to take that risk. If this was $170 stock, I would not do it, right? Because 5% of $1,700 or 2,000 of $20,000. Well, that's $1,000 loss. That's, for me, that would be 4% loss of my account value. So I would not do it. But $14 stock, I'm willing to go short. So I'm kind of breaking my own rules. But the only reason I'm doing it because it's a low price stock. Rumble, potential for new subscriber. Okay. PayPal, I don't know about PayPal. Looks like this is just, it's a very weak rebound. So I personally would stay away. For a short-term trade, I would try to get on a stock that actually has a strong rebound. Apple, I like Apple rebound, right? Strong rebound. It's actually looks like it's back above that downtrend line, right? So Apple, I think, is fine. Google, I think, is fine. But again, short-term trade, so these stocks got a pretty strong rebound, right? And the follow through. On the stocks that had weak rebound, like PayPal, I would stay away, personally. Eddie, what do you look for new trades? Yeah, you're an elite subscriber. I would enter SMS alert, go to SMS alert, enter your phone number, right? Same thing on the yellow tunnel side. You know, every time I would trade in the middle of the day, you would get an alert, right? So today is HPE is the new, so I'm closing HPQ, opening HPE, right? So that would be the trade. But sometimes if the market moves a lot, I would do it outside of the live trading room hours. Then the best thing is to either look at the trader log for today and SMS message, kind of do both. You know, you can look at the trader log to see any of the trades, like 15 minutes or half an hour prior to close, or set up, or both, set up an SMS alert. Yes, Mac, in terms of schedule, we have revised the schedule. So Scott will do Wednesday closing bell and Friday morning. The rest I will cover. So if you go into Elite Circle, get started, this is the new schedule for Scott. Wednesday closing bell, Friday morning bell. Fred, HP, yeah, 14, 13, 17, 18. Spiders is weakening. Yeah, short-term spiders is overbought, right? It is weakening. We were talking about 420 overhead resistance. You know, first level of support is the 408, right? So it looks like we're on its way to retest the 408 level. It looks like everything turning negative, even QQQ. And main weakness is your, you know, consumer staples, your REITs. So it looks like value stocks are underperforming, right? You have value stocks underperforming technology. So I think a lot of people are going to get caught by that trade because that has been a safety for at least this year, 2022. And now this is reversing. So I would consider decreasing your exposure to value stocks. And maybe if you're still doing long-term, kind of short-term aggressive trade, I would stick with the QQQ. Let's see if there's any meaningful, right, on yield. Something must have happened in the market because yield is jumping. So yield rallied, dollar rallied, and that's causing the market to pull back short-term. All right, I still think that this is a healthy pullback. I would watch at 408. If you're an aggressive short-term trader, maybe buy at 408. Next level would be 398. It is important for the bulls to hold on to both 398, 408. If 408 doesn't hold, 398. You know, if we drop below 394, then, you know, potentially we can retest 380 level again. I don't think that's my core scenario, but I mean, I don't have this. My core scenario that this is a healthy pullback in this rally and the bottom is confirmed, and you know, I would short term would use this opportunity to add. Sunil, yeah, dynamic power trader, elite circle of the, yes, this is something you get SMS message. You want to get SMS message or look at my orders and positions. You can do it on elite circle, right? And you can also use it on yellow tunnel dynamic power trader. Marvin, thank you. How long after you place the trade would be the longest time to enter it? Eddie, unfortunately, market is volatile, right? I mean, I could buy, you know, a trade at 415 and, you know, 5 minutes later it's at 410. So I would stick with these rules, right? The way you know the rules is that 4 trades, I would stick with 4, no more than 4 positions, 2.5% of account value. Right, it's very hard. You know, if the market moves 4% from the time I enter the trade, everything might change. So I would actually wait till the next day. Wait till the next day and ask me the question, you know, am I still bullish on this stock? You know, right now I'm kind of telling you that I'm bullish on the market. So if the market pulls back, in theory, you have a better price point and you can enter, like, you know. But in reality, I don't want to generalize the rules. In a volatile market, I would rather you wait till the next morning and ask me the question, right? To be on the safe side. Bob, so Scott is doing the closing bell today, and I will see you guys Thursday morning. Thank you. All right, that's all I have for today. Again, do me a favor, please follow us, like us on, subscribe on YouTube channel, subscribe to our Discord channel, and I will see you guys tomorrow morning. Thank you.